Hello traders, welcome back to this channel. This is Trading Now and I'm your host Mubo FX. Today is on Saturday and I just want to show you guys how I do analyze my market. As you know guys, for those people who have been in this channel, and I really appreciate to those people who are getting back to this channel. If you are a returning subscriber, and if you are not subscribed to this channel, please subscribe, leave a like, hit the like button, and please share this content to reach as to many people. For those people who have been on my channel, they know that I trade gold, and so today I want us to do an analysis for gold, for gold, US dollar against US dollar. As we can see, for a quite some time the market have been in this zone. It has been consolidating. Let's say the market has been consolidating this zone for a quite some time. I guess the consolidation started all the way from the consolidation started about 23rd October, and in about a month the market have been in this one zone, this zone that I have labeled on green. The lowest point that the market has touched in the period of that 1 month is the prices of 1953, and the highest price the market being touching the price of 1909. So today I just want us to do the analysis for the market, and on so that we can know what we expect the market on coming Monday. Today is on date 4 November and it's on Saturday. As you know, the market are closed on Saturday, but we are going to do our analysis on this Saturday because it's supposed to be done at this moment. That's how it does my analysis. I mostly does my analysis quite well on weekends. So I start with the with the highest time frame as possible. For me, I'll start with the weekly time frame. As you can see on a weekly time frame, the market has been on an uptrend, reaching to the point of about 2082, and then it went back all the way to the prices of 1807. That is according to our weekly analysis. So fast forward, we shall just mark the zones that the market has started, putting my my uh, my my support area at this point, because that is where the market started off, and then putting my resistance area on the point that the market reached and never broke those areas. And as you can see, the market has left a week, and I will just label from the end of the week, from the closing of the candlestick of the body up to the end of the week. So make my I just make my support zone to be aligned. My support zone to be aligned there. Okay. Then the second thing you have to look for is where the market retraced back. Since there is a lot of retracement in this market, we will not retrace each and every. We will not mark each and every retracement. So the best thing we should do for now, since the market started at the zone of on our weekly time frame, since the market recently started on a zone of 1611, and then it started to take long up to the levels of 2085, and we have already marked those areas. So secondly, the thing that we'll do, will just mark half of this distance the market has covered. Half of this distance the market have covered. My analysis tools are not so good. I'm working on improving my analysis tools. I'll be improving my analysis tools soon. So you just you just change the color so that you can notice which is the middle line and whatever. Then after dividing that distance into two parts, then you will have to divide the distance those two distances at half again, so that the full distance will be divided into quarters. So as I can see, my first half is about on these zones, yeah, and this is our second half. So we'll just change the color. I'm sorry for the noise. I'm in an open place. You just change the color of these lines so that we can identify easily or which every line means. So the next step I'll just turn to my daily time frame. After marking those areas, we'll turn to our daily time frame. After coming to a daily time frame, we can see that the market has broken this possible support, this possible resistance, and now it might be used as a possible support. As you can see, for the price action, there's a candlestick which has been formed here, of which this candlestick shows rejection for the sellers. Yeah. So since you have turned to your daily time frame, then you have to come back on your weekly time frame, because you have understood that the market has a high possibility of going up. So this area that we divided into quarters, the first quarter that the price is currently in, we'll divide that part into two. Okay guys, and change the color. We'll divide that part into two and change the color. Yeah. Then because of possible retracement, we'll just divide the second part, the second quarter into two again. So we are now considering on our weekly time frame, we are only considering on our first half. Remember that the distance we divided into two, and then divided those two parts into four parts. So now we are considering on the first half, which we have divided it into four main parts. Then let's get back to our daily time frame. So as you can see in our daily time frames, the market is at the price of 1992, and it had came to retrace at the prices of 1969, of which it made a pullback. So let's turn to 4 hours time frame. On a 4 hour time frames, as you can see, the market has formed a support zone on the prices of 1969. It has formed it has formed a perfect support zone. So in order to, since this is a very huge distance, so we will have to divide again this part of where the market is currently in. Since you can see in a 4 hour time frame, our lines are far away from each other. So for us to get in a good position, in a swing position where your risk will be less compared to a reward ratio. So the thing we will do is just get back to our daily, our weekly time frame, and we'll have to divide on those zones where the price is at now, and divide it again into two parts. Yeah, into two parts. Guys, make sure you understand, and if you don't understand, please go to the comment section and tell me to redo this video again, and I will redo it for you guys. Yeah, so come back, yeah, and you can see the market has already broken our possible resistance zone, of which I have marked with this pink color. It's at the prices of 1996. Let's get back to 4 hours. As a 4 hours time frame, you can see the market has already faced a rejection at the price of 1969, of which and it had already formed a support zone on the prices of 1969. Let's get back to 1 hour, guys. On our time frame, the market is suggesting that it's a possible resistance zone coming to this price, to the prices of about 2004, and then coming to make a second top at the prices of 1995, of which means that there is a high selling pressure, which the buyers are facing. So let's get to our lowest. For me, to make my entry zones, I just enter at a 15-minute time frame. As you can see, at 15 minutes time frame, there was a news that were read yesterday from 15:13 until to 17:13, and that's why you can see these candlesticks. So as what I have concluded on this market, when we get back to our 4-hour time frame, that the market will just come back. It will come from those zones as it has faced resistance. So the market will come down, and it has a possibility of coming and breaking those zones and coming and forming a possible support zone at this point. So that's what I'm expecting from the market as the week starts from Monday. It will come up to these prices of 1960s, and then it will make a pullback. Yeah, it will make a pullback to higher levels. So as for me, I will just come at 15 minutes time frame and watch out for the patterns. As you can see at this particular place, the market is forming sort of a triangle. Eh,